Do you know what candlestick trading is? No? Let me explain in detail what it is and why it's needed. Candlestick charts are widely used in cryptocurrency trading and other financial markets to analyze price movements and make informed decisions. These charts provide a visual representation of price data over a specific time period and consist of individual candlesticks, each containing information about the opening, closing, high and low prices during that period. Here is a breakdown of the key components of a candlestick. Body. The rectangular body represents the price range between their opening and closing. If the closing price is higher than the opening price, the body is usually colored green or white, indicating a bullish or positive trend. So, in opposite, if the closing price is lower than the opening price, the body is typically colored red or black, signaling a bearish or negative movement. Wicks or shadows. The thin lines extending above and below the body are called wicks or shadows. The upper wick represents the highest price during the period, while the lower wick represents the lowest price. These wicks provide information about price volatility and the range of price fluctuations. Candle color. As mentioned earlier, candlesticks are often color-coded to represent bullish or bearish movements. Candlestick patterns are essential for technical analysis, allowing traders to identify potential trend reversals, continuations, and overall market sentiment. Some common candlestick patterns include doji, a candle with nearly equal opening and closing prices, signaling market indecision. Engulfing pattern, where one candle completely engulfs the previous one, suggesting a potential trend reversal. Hammer and hanging man, single candlestick patterns with small bodies and long lower wicks, indicating potential reversals. Morning star and evening star. Three candlestick patterns signaling potential reversals with a star, small body candle, in the middle. It's important to note that the white candlestick patterns can provide valuable information. They should be used in conjunction with other technical analysis tools and indicators for a more comprehensive understanding of market conditions. There are various trading strategies using candlestick charts in cryptocurrency trading and other financial markets, such as trend continuation strategy. Traders look for established trends based on candlestick patterns like rising or falling trends. After identifying the trend, the strategy involves entering a trade in the direction of the trend when specific candlestick signals occur. Trend reversal strategy. Traders search for candlestick patterns suggesting a possible trend reversal. For instance, the engulfing pattern may indicate a potential change in the price direction. Traders may enter a trade anticipating a trend reversal. Support and resistance trading strategy. Traders can use candlestick support and resistance levels in combination with candlestick patterns to make decisions on entering and exiting trades. For example, entering a position when a resistance level is breached after a formation of an engulfing candle. Strategy using indicators and candles. Traders can combine candlestick patterns with various technical indicators like moving averages or the relative strength index (RSI). For instance, entering a trade when signals from indicators align with the formation of a candlestick pattern. Day trading strategy. Day traders can utilize short time intervals of candlestick 5-minute or 15-minute for quick and short-term trading. They may search for a candlestick pattern suitable for short-term price movements. Scalping strategy. Traders can use candlestick charts to quickly respond to rapid price changes. Tactics include trading based on hammer or hanging man pattern on short time intervals. Using candlestick charts in cryptocurrency trading provides traders with a powerful tool for analyzing price dynamics and making informed trading decisions. Different strategies based on candlestick patterns allow traders to identify trends, reversals, and support resistance levels in the market. It's important to remember that a successful trading strategy requires not only the ability to recognize candlestick patterns, but also an understanding of the market context, the use of other technical indicators, and effective risk management. Combining candlestick charts with other methods of technical analysis can enhance the accuracy of trading decisions. Traders should also consider that markets can experience sudden changes and past results do not guarantee future success. Sometimes updating and adapting a trading strategy to reflect changes in the market conditions and crucial aspects of successful trading. So guys, I hope this information has been extremely valuable for you. Use it to enhance and grow your financial portfolio. In the upcoming videos, we will delve into the many more important and hot topics. Don't forget to subscribe to my Telegram channel, link in the description. and YouTube channel. Hit the like button, enable notification, and share your valuable comments. And this has been Michael with you, and until next time, guys. Bye!